This is Don DeBartolo, a senior commodities broker and market strategist with Daniels Trading in Chicago. I'm also the trader behind the Trade Spotlight advisory service. Trade Spotlight is broken up into three segments: Trade Spotlight Futures, Trade Spotlight Commodity Options, and Trade Spotlight Future Spreads. Beyond the Spotlight is a video that spotlights two or three markets that may become trading opportunities for the week ahead. This week starts with Monday, March 30th, 2020. Please pause the video and read the disclosures so that you understand the risks involved with futures and commodity options trading. Quick preview of what the Trade Spotlight advisory service looks like. It's an email service directly into your inbox. You'll have the timestamp so you know when the trade recommendation is sent. A write-up of the trade, the precise entry order, whether it's a futures contract or an option contract or a future spread. Any important details like margin requirements, last trading days, trading volumes, the precise risk and profit potential of each trade, again, whether it's a future option or future spread, and a chart so you go ahead and take a look at the formation and technical indicators. Let's jump right in on the first chart. It's the June 2020 E-mini S&P, obviously a very popular contract right now, but it always is. But as you can see from this chart here, just massive trading ranges. Very difficult to trade right now with futures contracts, unless you're using trailing stops, not carrying positions overnight or over the weekend, just being vigilant with moving those stop losses and managing your position accordingly. What I'm looking for on this chart is just I just want to show you more of a broader view of what I'm looking at here. This looks to be now a W-shaped recovery as opposed to a V-shape. V-shape meaning market sells off now that coronavirus is a global pandemic, and then we find our footing, market rebounds and heads higher. It seems like that won't be the case. We had a nice little rally last week, and there may be a little bit more to come, maybe up to this 50% Fibonacci retracement of this big sell-off, which puts it at 2785.5. Although you can already see Friday and overnight the market has sold off a little bit here. I'm looking for the market to sell off into this area, test this low. That new contract low was put in on March 23rd at 2174 even, right here. Looking for the market to come into this level here. This would be an opportunity to potentially go long futures or buy calls if this low holds, and then take off from there. So we're looking for a W-shaped recovery in this market. Again, probably staying away from futures, but would be looking to trade calls or bull call spreads. Short term, you can look at put options to the downside here, especially if this 12-month contract low is going to be broken. You can see the momentum, the upside momentum is in check, and it looks like it's setting the roll over. The trend is slightly up, but that can change in a hurry here with a continuation to the downside. Okay, next chart is the June 2020 U.S. dollar futures contract. U.S. dollar had a nice rally here. And then I did a Fibonacci retracement of this rally. You can see the 50% Fibonacci retracement comes in at 99.21. We just broke through that on Friday. We also broke through a 20-day moving average, but we're resting on a 50-day moving average. That 50-day moving average is at 98.40. The market potentially has a little bit more downside to it. You can see the trend has flipped down. The momentum, this is the stochastic indicator, is still strong bearish. Not in that oversold territory yet. So potentially into this range here. There's a 200-day moving average, which I believe can act as support at 97.07 half. So looking for the market to fall into this level here, create some footing, and then turn around. This would set up potentially a 1, 2, 3 formation. You have the number 1 point here, which is the 12-month contract low that was put in at 94.53 on March 9th. Number 2 point is up here. That is 103.96 even from March 23rd. Market sells off, creates a number 3 point, bounces off this level, and then we look to short the contract if the momentum turns around, comes back, and then is hooking over. Otherwise, there's a potential opportunity to trade this to the upside on momentum. If this hooks over and there's strong momentum, we'll look to buy and ride that as long as we can with a trailing stop loss, and then get ready to sell up in there. But June 2020 US dollar, very volatile at this time. Options are a little light, so would be looking at the futures for a potential trading opportunity. And the last chart today is the July 2020 cocoa market. If you may or may not already know, we established a option position through Trade Spotlight Options in cocoa already by purchasing a call option on this double bottom formation. This number 1 point back here is the low of 22.46 from August 30th. And then you have the new low that was just put in, actually a 12-month contract low that was put in 22.54, excuse me, not the 12-month contract low, but tested that level at 22.54 from August 26th. So we have the double bottom formation in place. The momentum is strong to the upside. The trend is still weak, but I anticipate the trend shifting once some of these highs are broken and we get back up into potentially this level in here, the 24 even level. We are holding the 24.40 call, 24.50 call already. That's seen by this draw, this green line here, just in front of the 38.2% Fibonacci retracement and that 200-day moving average at 25.16. So looking for the market to get back up into this level. But I'm bringing this up again because there's a future trade opportunity here with a break of this pivot point high that I've drawn off with that blue ellipse. That high is 23.04 from March 25th. So going to put out a trade recommendation to go long on a break of that high. Stop loss below these lows in here, or maybe if that risk is too much, it could potentially look under these lows as well. But I'll base that on the risk-reward factors for the trade once I establish the recommendation. But looking for the momentum to carry higher, breakthrough of this level up to 24.50 and perhaps beyond too. There's the 50% Fibonacci retracement at 25.69. That could be a target as well. So stay tuned for the July 2020 cocoa trade recommendation coming shortly. All right, if you have any questions on the video or the markets or the trade spotlight, feel free to contact me directly. This is my local international number, cell phone where you can call after hours or text. I'm a toll-free number. You can email me directly at tradespotlight@danielstrading.com. There's a lot going on in the markets, and I'm here to help. If you're not a subscriber to the Trade Spotlight, I encourage you to do so. It's a free service to my clients. Otherwise, you can subscribe to it. You can get a first 90-day free trial to check out what I'm doing. I think it's worthwhile. But if you go to the Daniel's Trading webpage, danielstrading.com, click on advisories up at the top, and then under technical indicator advisories, you'll find Trade Spotlight. Write up about it, recent posts, and you can subscribe. So thanks for taking the time to listen. Be safe. I wish you, your family, your friends are all safe. And let's trade. Happy trading.